Well, here in Spain, we're talking to Chris McCann from Blevins this week. How are you doing, Chris?
I'm very good, Howard. And yourself?
I'm very well, thank you very much indeed. Well, it's never dull, is it? We now know that the UK general election is just a month away. It therefore seems an appropriate time to look at the current UK financial landscape and what may change following the elections. So I'm going to ask Chris today for his thoughts on this. So Chris, how is the UK economy doing these days? And do you think a new parliament will impact its progress?
Well, look, I think the fact that Mr. Sunak has felt the need to call the general election now tells you a lot about the state of the UK economy. I think, look, as we speak, the economy continues to navigate through a mix of challenges and opportunities. It's shown moderate growth, although it continues to face pressures from high inflation. Employment levels are relatively stable, but there are concerns about wage growth not keeping pace with inflation, leading to a squeeze on household incomes. Consumer confidence has been fluctuating, reflecting uncertainties around inflation and economic policy. The housing market remains buoyant, though there are signs of cooling as higher interest rates make mortgages more expensive, which again could potentially impact consumer spending and overall economic growth. And I would say, finally, the continued effects of Brexit continue to be felt, with trade disruptions and adjustments ongoing. As regards a new parliament, it can always significantly impact the UK economy, depending on the policies and priorities of the new government and effective management of fiscal policy, trade relations and social welfare programmes. It's going to be crucial in shaping the UK's economic trajectory in the coming years.
What about taxation? I know you don't have a crystal ball, but has either of the main parties given an indication of what tax changing they'll be introduced, if elected?
Look, as regards the tax landscape, Britain's tax burden remains at the highest since World War II. However, that hasn't led to a change in terms of how both parties approach their fiscal policy. The current Chancellor has pledged to cut personal taxes further, with more tinkering to national insurance looking likely, to try to stimulate economic growth. However, it's likely that further tax cuts would come at the expense of public services. Meanwhile, Labour's approach focuses on increasing taxes on the wealthy and large corporations, which will go to fund public services and reduce inequality. This potentially could lead to increased revenue for social programmes, but might face opposition from businesses and high earners, which could potentially affect investment and economic activity going forwards. It was interesting, but on the 8th of April, the Labour Party unveiled its plans for closing the so-called tax gap and aims to deliver an extra £5 billion of tax per year by the end of the next Parliament, by providing HMRC with additional compliance resource and investing more in HMRC's technology infrastructure and digital services. But look, I think it's fair to say that it's business as usual. Both parties' tax policies continue to reflect their philosophies. Conservatives prioritise lower taxes to foster growth, while Labour aims to increase taxes to fund public services, reduce inequality.
The Conservative government announced a couple of months ago that will reform the non-domicile regime, including around liability to UK inheritance tax. This still needs to go through a consultation process. Do you think these proposals could be scrapped or changed if there's a change of government?
Well, if the Conservatives remain in power, which looks unlikely, I think the proposed reforms would proceed, albeit with some adjustments based on the consultation feedback. I suspect they might balance the need for reform with some concerns about maintaining the UK's attractiveness to international talent and investment. I think a Labour government would likely endorse the reforms, But I would imagine they will push for more aggressive changes, and the consultation process under Labour could result in even stricter regulations and higher tax liabilities for non-UK domiciles.
What about investment markets? Do elections usually have an impact on stock markets? And can we accept some temporary volatility?
Normally, we should always expect the potential for short-term volatility as markets react to election news, opinion polls, and then thereafter initial policy announcements. However, in relation to this particular UK election, absent any major surprises, I don't think we should expect it to be a market-moving event. The opinion polls are strongly skewed towards a victory for Keir Starmer's Labour. Moreover, macroeconomic policy differences are far smaller than they were in 2019, when Boris Johnson squared up against Jeremy Corbyn. And this time, both parties are pledging to stay outside the EU single market.
Well, Chris, if people want to have a look at their finances in this changing horizon, how can they get in touch with Blevins Franks?
They can, as always, Howard, they can visit our website, blevinsfranks.com. They will be able to access all the telephone numbers of the local partners in their area. Alternatively, they can complete a form online, and then somebody from Blevins Franks will be in touch with them to suggest the most appropriate next step.
Chris is back again next week when he will compare investing in property to investing in shares and equity funds.
Yep, Howard, look forward to it.